Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment. For that, let's bring in our next guest. That's going to be Landon Swan, co-founder at LikeFolio. Welcome back to the show, Landon.
Thanks, Tom. Good to see you.
Good to see you, too. You know what? I think Walmart investors have been pretty happy. They've transitioned themselves pretty well. They are, getting more into the grocery side of the business, which helped support maybe some softness in those bigger ticket items, but it seems like they're executing across the board here, Landon, which is why the stock's near all-time highs, right?
Yeah, I mean, it's doing fantastic. If you look at what this stock was doing, like December 11th was the low. It ticked under $50. And pretty much since then, it's been, straight up. It's done extremely well. The last three earnings have been all very positive. And in fact, one of the things that's kind of interesting about this, if you notice, right before each earnings jump, there was a little bit of sideways or a little bit of a pullback. So I think it's very interesting that we've been, we're hitting highs here. Like yesterday was an all-time high, but it's been slowing down. If this continues for the next month or so, the pattern, continues to exist right before earnings. So that'll be interesting to see if that happens. But yeah, the data that we've got on Walmart is pretty strong. I mean, they are, they're eating Target's lunch. I mean, we've seen Target really struggle. The stock has done nothing compared to what Walmart has done. And across the board, I mean, even when you look at happiness, Walmart is beating Target, which is, if you'd have told me that a couple of years ago, I'd have said, you're crazy. That never happens, right? I mean, it's always been Target over Walmart on happiness, Lowe's over Home Depot on happiness. That's kind of been like a bread and butter of LikeFolio data, but not recently. There's been just this movement, I think, towards Walmart, and they're really taking advantage of the movement away from Target. I know that they're investing a lot into technology. They're trying new things. They've got AI customer service reps. They've got augmented reality you can see what things look like in your house before you buy them. That's actually that service has decreased the amount of returns that they've had, because you can sort of try things, bigger purchase items before you buy them. They're doing a lot. I mean, Walmart Plus is growing double digits over time. They've got this new marketplace, which is really interesting because they're taking on eBay and Amazon. And they've got the new delivery pickup locations, those 8,000 square foot delivery pickup locations. They're really chipping away. They're pulling away from Target, and they're chipping away at Amazon. They're even taking on, some of our LikeFolio's favorites, like Chewy, which is that online vet and pet food and toys delivery service. They've got all kinds of Walmart's doing all kinds of things to compete with Chewy now. So they are really the behemoth that, a lot of times I talk about big companies and they've got this huge lead, but they can't do everything. So all the small players chip in at the different niches. But Walmart is really starting to expand and take on Amazon and pull away from Target and fight off some of these smaller competitors like Chewy. So it's a behemoth, and it's got a lot of momentum. I think that the all-time high yesterday is deserved, and this we'll see where this goes, but definitely bullish data coming from LikeFolio.
Landon, the amazing thing to me, the thing that Walmart amazes me on a daily basis is a company this size. You would think they would be bloated and doughy and slow to move, and they're the exact opposite. For a company this size, they are lean and agile, and they move in and out of things. You mentioned the third-party marketplace. They're competing with everybody, with Amazon, with Chewy, what you just mentioned. It doesn't matter the size of the company. What they're getting into advertising now. Their e-commerce is exploding. They continue to dominate in terms of scale and brand and how they manage everything. How does a company this big move so lean and agile into these different places, and they continue to improve the overall experience? It's amazing to me how they do it.
It is. It's almost entrepreneurial, right? I mean, that just doesn't work with big companies, right? I mean, I don't know what their structure is, but if I had to guess, I would say that they've got entrepreneurial type people in charge of these different divisions, because it is absolutely the opposite of what you would think of a behemoth company. You're right. You'd think it's very, very slow and easy for smaller niche competitors to pick off at those different locations, but that's not what's happening. And we may turn around a year from now and say, hey, that marketplace idea was terrible. Competing with Chewy didn't work out. We'll see. But just because of the way that they've been able to execute with their, getting their margins in the right place, the way that they can squeeze suppliers, the way they can deliver value to customers, and the way that they're attacking all these different angles, it just gives me a little bit of confidence in their execution ability. Again, we'll see if if this marketplace taking on eBay and Amazon, all the logistics works that they've done, moving away from Amazon and getting faster delivery, all of that, taking on Chewy, all the things. We'll see if they work out. But the fact that they've so far been able to execute and been able to move this quickly tells me that they likely are able to execute it, and this is going to continue to be a strong winner. I mean, last quarter, their earnings per share were up 10% on revenue. That was up 5%. So that tells you their margins are improving, and they're crushing it on revenue and earnings. So, I mean, this is just a company going absolutely in the right direction. And, normally when it comes to companies hitting really high prices, I'm always a value guy. Is this overpriced or expectations too high? The data that we've got is pretty strong. I mean, I wouldn't be surprised if we go sideways or pull back a little bit into earnings. But come November 19th, when the earnings report, I would expect for earnings to come out and please investors as they have the last 3 times.
Yeah, and Landon, if you look at this company, the innovation that they're actually doing, out of Bentonville, Arkansas, right? You just didn't expect it across the board. But this has become a need for a lot of people, right? Because if you're in Bowling Green, Kentucky, there's only one place you're probably going for your groceries and anything else you need, right? Where they're locked into that area where 90% of the population lives within 10 miles of one of them, where it's a necessity at this point, and that grocery business has helped, kind of lock people in. But when you look at the valuation on this on a historical basis, for a retailer that has, retailers like this have smaller margins, is that a concern?
I think that your point about the grocery store is a really big one, because you need groceries every week. You don't necessarily need to go to the non-grocery section of Walmart every week, right? But if you get in that habit of that's your grocery store, you're going to walk through the electronics aisle. You're going to walk over and check out the clothing. And it's just sticky. It's going to bring people in continually. And I think that's going to really help them. It's been a great transition for Walmart and Target both to get the grocery in there and compete. And I think that that's going to hold off all the margin concerns. And even if you look at last quarter, like I said, revenue's up 5%. I'm rounding off, up 5%. Earnings up 10% year over year. So margins are going in the right direction. I think that there's a chance that through their efficiency efforts, both with logistics and technology, they've got a chance to continue to push those margins higher and higher by moving the expenses lower. So, yes, historically, margins are going to be tight in a retailer like Walmart, especially in the grocery section. But I think that where we're at now with technology and seeing how much they're willing to innovate and invest in technology and logistics, I think that there's a good chance that they continue to push expenses down relative to revenue. In other words, margins continue to rise.
In the words of John Candy from the movie Stripes, lean, mean, fighting machine. Right here, Walmart, and your data supports that. All right, great stuff as always, Landon.
Thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data. I always look at valuation on this one, but he makes a good point, and you mentioned advertising.
Yeah.